we've designed the fund to have particularly low gearing. The maximum that we've set in the prospectus is 55%, and partly because of the fact that many other property funds have come unstuck because of high gearing, we've deliberately gone for a sensible level, and also the Italian banks will dictate to a degree how much we can borrow. Typically they won't lend above 60% and never have done. It's not a knee-jerk reaction to the financial climate, it's just something that they've maintained for many, many years. There is a currency issue in that we've deliberately denominated the fund in sterling, partly because of the main investment market we work in will be UK investors and UK pension funds, but the currency, we feel that the fund is not a currency fund, so we've got to be careful not to be seen as taking speculative stances on currency. We can use the sterling that we raise to convert to euros to make acquisitions, or we could use the sterling as a security for a euro-based loan, and we will monitor each case as we buy each property, so we're not having to make a major currency decision on the acquisition of one large property. We can make decisions as and when we buy and sell. This is a very important issue. Many of these funds, and ours included, are deemed illiquid by the regulator, and if you are buying again one large property, then the fund is illiquid. Our fund will have a portfolio of properties smaller in value to most, and by definition we'll be able to trade, we will trade those in terms of buying, developing and selling. So at any one time we will have some liquidity. We've said we'll keep around 5% of the fund liquid anyway, but for the trustees of pension schemes it's an important issue, particularly in the event of a death of an investor, and if we're notified in good time and we know there's a sale coming through, we can keep aside some money to help people get money out quickly. We've looked at this very carefully and we feel we've got a unique situation. We've highlighted the use of the Capara system, where buyers will spend quite a lot of money on a deposit and thereby securing their acquisition. What we feel is with the properties we'll acquire, as soon as they've finished the design stage, we'll actually market these in an effort to pre-sell. And if we can secure a pre-sale, then the buyer will pay a significant deposit to the fund for the acquisition, and in doing that will greatly reduce the amount of equity that we need to use and bank debt, and therefore what will happen is the return on the actual equity we do use will go up significantly. Very much so. The affluent buyer is deliberately seeking that type of opportunity. They don't want the difficulties associated with planning and the initial stages of the development, but they do want to have their say in the finishes, the completion of the interiors, etc., and they will pay a premium for that. So our ability to secure pre-sales that we've demonstrated with other projects will be very, very important to the overall returns investors will receive.